Hi guys, a very good evening to all of y'all. Today we'll be looking at another new and an important standard which is known as IAS 12 income taxes. This can be tested under a company accounts adjustment. It's a compulsory adjustment, as well as if the examiner prefers, he would be testing it from your section A as an MCQ or an OTQ in section B. Okay. So when you are learning, make sure you prioritize this standard. Okay. So in terms of taxes, okay, there are different various types of taxes. There is income tax, there is inheritance, there is capital gains. Leave those to a side. Okay, in terms of your accounting, in terms of financial reporting, you will only be tested on your income taxes. Okay, so for an example, let me give you all a brief understanding. Say I am doing a business, right? I'm involved in buying and selling tiles. Okay, so obviously by selling off tiles, I'll be earning an amount of profit. On this particular amount of profit, I need to give back a certain proportion to the government. That is known as taxes in simple terms. Okay. On my profit, they will be charging a certain amount as tax. Simple as that. Okay. In terms of double entry, tax is an expense, right? So you'll be debiting off your expense income tax expense account. Okay. And where will you all be going and crediting? You all be going and crediting it under income tax payable, which will be shown under your current liability. Okay, you all need to understand clearly. Generally, taxes are on accrual basis. Okay, you all will not pay taxes on cash basis. You all be doing taxes on accrual basis, right? And also, you all need to understand why I'm putting it under current liabilities, because your taxes or the payment for tax needs to be settled within 12 months time, right? And if it's not settled, obviously I'll be having fines. So that is the reason why I'm telling you all taxes are under current liability. Why? Because you all need to settle off within the next 12 months. Okay. Next, moving into this table. See, in your exams, I would say that you all do not need to use T accounts at all. You all are not required to use, but for the people who prefer, let me tell you all how this works. Okay. See, this is your T account, right? Always taxes are payable, right? They are on accrual basis. We need to pay it in the future. So you will be having a payable control account in terms of taxes. You will be having your opening balances and you will be having your closing balances as well. Okay. This is what you all know until so far. Say if you all make a payment to the tax department of your respective country, you all be crediting your cash, and where will you all be going and debiting? You will be debiting your income tax payable. Okay. So that is also done. Thank you. And obviously, each and every year, as I told you all, tax is an expense. Here it is. Tax is an expense. So each and every year, you all need to debit your expense. And where will you all be going and crediting? You all be going and crediting your current year taxes under your payable account. Okay. So this is the basic format in terms of if you all are planning on presenting it in your T account, or if you're planning on doing the working in T account manner. Okay. But I would say don't use this method because it is time consuming. Okay. It is not needed at all. Only for explanatory purposes, we could use this. Okay. Okay. Before we go deeper into your standard of IAS 12, let me give you all the subtopics of what you are supposed to learn. You all will only be learning something related to current taxes, and also you all will be learning something that is known as deferred tax. Okay. For the people who have done accounting at your school or college, current tax is a recap session for you all. Okay, you all know how to do it. Deferred tax is something totally new. Okay, it's new, but it's a very easy one. Okay, in simple terms, for now, let me tell you all, deferred tax is postponement of your tax payments for the future. Okay, in simple terms, what do I mean by deferred tax? Deferred tax is you postponing your tax payments for the future. Okay, simple as it is. We don't need to worry about deferred tax. In a bit, we'll be learning what it is in detail. Okay. But for the remaining people, don't worry. Since you all are new to financial reporting, we'll be learning both current taxes as well as deferred taxes bit by bit and after let us progress further. Okay. Okay. Now, in terms of current taxes, what we used to do is see, we'll be having profit before income tax, right? Right. Say for an example, it was 150,000 for a current financial year, right? And government will exactly give us what is the income tax rate. In this, it is 20%, right? So 150,000 at 20% will give you all an income tax expense of 30,000 for your current financial year, right? So 30,000 is the entire payment that we thought we needed to pay for our tax department. This is what we have been doing so far from school, from college, all of this. Okay. I will tell you all this is not wrong. This is incomplete. Okay. For basic bookkeepers, for basic school people, for basic interns, this is totally fine. This understanding is more than enough. But now you all are stepping into financial reporting skills level. Okay. You all are accountants, you all are junior accountants, you all are assistant accountants, right? So you all need to broaden your concepts in terms of IAS 12. Okay. So that is what we are going to learn in terms of current taxes as well as deferred taxes. Okay. Can you all see here this time scale that I've given you? You all need to understand that both current taxes as well as deferred taxes, these are paid on accrual basis. We do not pay them on cash basis. Okay. What do I mean by that is, look at this. Consider 1st January 2001 to 31st December 2002 is your current financial year. Okay. Now, the tax expense or the tax payment will not be paid on 31st December 2001. No, this is totally wrong. The payment for your financial year, which has ended on 31st December 2001, will only be made during 31st March 2002, which falls within your next financial year. At that particular date only, you all will be making the payment of this financial year. Okay. Now you all can ask me, why does it take 3 months to pay? Why does it take 3 months to pay? Okay. For this also, there are simple reasons, logical reasons. Number one, we make tax payments on accrual basis, right? It's not on cash basis. Number two, do you all remember IAS 10, events after reporting period? Even though you all complete your accounts on 31st December 2001, you all take that 3 months of gap is because you all have adjustments to make. It can be your inventory adjustment, it can be a revaluation adjustment, it can be correction of errors, of frauds and errors. All of those will be done within this period. Right? After that only, you all will be finding revised profit before tax, and on that particular chunk, you all be charging your tax expense. And that amount only will be paid finally to your tax department of your respective country. Okay, that is it. Okay. Let me give you all another example. Let me give you all another instance. Say now this is your second financial year, which starts on 1st January 2002, right? And it ends on 31st December 2002. Again, I'm repeating myself. Even though this is your current financial year, this income tax expense and the payment relevant to it will be only paid on 31st March 2003, right? Which falls under your next financial year. Okay, you all need to be able to determine this. This is only step number one or the basic foundation of IAS 12. Identifying when we will be paying taxes. Okay. In summary, guys, in summary, what I want to tell you all is your income tax of your current financial year will be paid in your next year or the next quarter. Okay. Always we prepare our tax payments on accrual basis. Okay. So how do I accrue is my next question. How do I accrue is my next question. See, I cannot exactly determine how much will I exactly pay or how much will be the final payment in terms of taxes, right? For an example, say that you're standing here. This is you. See this ugly person? This is you. He's standing on 1st January. You tell me, can he exactly predict and tell, or can he exactly guess and tell how much is the final tax payment that he'll be making on 31st March 2001 for your current financial year? Can't, right? Because he's after all a human. He's not a robot. He's after all a human. He will not be exactly able to measure and tell how much is the actual payable for my tax expense. Okay. Another instance. Say for an example, he's standing here on 1st June 2001. Right. Again, he's making an estimate for the future payment that he's planning on making on 31st March 2001. Okay. Again, tell me, can he exactly identify, can he exactly determine how much he is supposed to pay in terms of taxes of your current financial year? I would say no. He cannot exactly tell how much. So therefore, this is done on estimates, right? Sometimes your estimate can be correct. Sometimes there can be something called as you either overestimate or you underestimate, right? In terms of taxes, tax payable. You can overestimate your tax payable or you can underestimate your tax payable. That is what we are going to learn now. That is what we are going to learn now. Sorry. Here it is. That is why I call it as over provision or under provision. Right? Another word for provision is payables. Okay. For people who are new, provision is a liability. It's something sort of a payable. Okay, that is what we are going to learn in terms of taxes. We call it as over provision or under provision. Okay, these are few tips. Okay, I'll give you all an exam tip in terms of IAS 12. Any question, any company accounts adjustment, any MCQs, any OTQs, if you all get IAS 12, okay, if you all get IAS 12, I want you all to write this format. Right? Don't worry, I'm not telling you all to memorize. It's just a 3-line format. I will guarantee and tell that you all can use it for any sort of questions. Let it be a company account adjustment, let it be an MCQ. You can use it for anything. Okay. What it needs to include is in terms of your profit or loss. In terms of your profit or loss, if they ask to find out your current year tax expense, again, I'm repeating myself. If they ask you all to find out your current year tax expense, you all only need to have 3 lines. Okay. Number 1 should include your current year provision, right? Or in simple terms, your current year payable. Okay. Say for an example, your current year is 2004. You will have an estimate or you will have a payable, you will have that will be fixed in your mind. Okay. That amount needs to be included when you are calculating your current year tax expense. Plus, right? Your second one would be something called as over or under provision of your last year. Yes, see, of your last year. Your current year is 2004. Your last year is, sorry, your current year is 2004. Your last year is 2003, right? So in terms of your last year, you will be either having over provision or under provision, right? That adjustment also needs to be included. After that, finally, you all will be coming with something called as deferred tax adjustments. Okay, don't worry, that part I'll come in a bit. For now, what you all need to know is in terms of your current tax expense, there is only three line items that you all need to do. One, you all bring in your current year provision or current year payable. Number two, your last year's either over or under provision of your last year's. And finally, you all be calculating something called as increase or decrease in your deferred tax. Okay. Now, for most of y'all, whatever I told will be Greek. You all won't be able to understand anything. Don't worry. I'll give you all a question. Okay. Now let me explain what is this over provision or under provision through this example. Okay, what I want you all to do at this point is pause the recordings and read this question. Okay, why? Because I'm going to read it only in a summarized form. Okay, the examiner wants you all to find out the tax expense for a year ended on 31st December 2008, right? Which will be showing under your profit or loss. Okay, so now through this, what you all need to understand is your current year is ending on 31st December 2008. This is your current year. Okay, now Simple has estimated its income tax liability. Okay, now this is an estimate. It is not the actual figure. It's an estimate. For the year ended on 31st December 2008, which is your current year, as 180,000. Now, what does this imply? What does this say? It says that for our current year, which ends on 31st December 2008, we are expecting, right? We are expecting that our tax payable might be how much? 180,000. Now, this is what we are expecting, right? I'm not confirming that it will 100% be at 180,000. No, this is just an expectation for your current year. And you all very well know, your current year's tax payment, will only be paid in your next quarter, which is next 31st March 2009. Okay. Okay. So we are expecting that in our current year, we are expecting that our income tax payable will be 180,000. Fine. Totally agree. And the payment will be paid in your next financial year, which is 31st March 2009. That's all fine. Okay. And I told you all, right, when you all get any questions related to income tax, you all need to follow a format. Okay. And this is the format. Again, this is the format. Under your current year taxes of 2008, you will be going and showing an amount of 180,000. Why? Because this is an estimate for your current year, which ends on 31st December 2008. Okay. And the double entry in simple would be is debit your tax expense, right? That is what I'm doing here. Can you see here? I'm debiting my tax expense by how much? 180,000. And where will I go and credit it? I'll be going and crediting it under my tax payable or income tax provision. So go to your balance sheet, right? Under balance sheet, under current liability heading, you all can credit 180,000. Okay. So your current year provisions double entry would be debit income taxes and credit your tax payable account. Simple as it is. Okay, simple as it is in your current year. Okay. Now, our content for today is to learn what is over provision or under provision, right? Let me give you all a tip. See, if any time your examiner wants you all to find over provision or under provision, always, always go and look at your previous year. If he wants you all to find your over provision or under provision. Okay, now I'm going to read. In the previous year, that is, here it is, 31st December 2007 is your previous year. Income tax liability had been, no, had means it has been already estimated in your previous year of how much? 150,000. Okay. Now in this year, they estimated that your income tax liability was 150,000. And also we know, even though we estimated on 31st December 2007, the actual payment will not be made on 31st December 2007. The actual payment for your year ended on 31st December 2007 will only be paid in your next year, which is 31st March 2008. So this is what we learned so far. Okay. Now, let me teach you all whether it's an under provision or over provision. One, through numbers. Number two, through logical explanation. Okay. See here, for my last year, which was ended on 31st December 2007, I expected that I need to pay for the government 150,000 only. That is what I expected. Okay. But actually, after 3 months, after the year end, after 3 months, when I'm going making the real time payment, I found out I did not need to pay 150,000. Instead, I ended up paying 165,000. So do you all understand? Do you all understand that I ended up paying more of how much? Of 15,000. Now tell me, what is wrong? What is wrong? I would say your estimate is wrong. Okay, you as humans, obviously, we tend to make mistakes. Okay, so in last year, what happened was I expected, okay, in another 3 years' time, I'll be going and visiting the tax department. I only need to pay them 150,000. Okay, that is what I expected. But actually, what happened was I ended up paying from my pocket excess 15,000. So this is an underestimate. Okay, this is an underestimate of my last year. Why? Because I only estimated 450,000. I only allocated cash for my last year for tax payment only 150,000. Right? But actually, I ended up paying 165,000. So what happened was I have underestimated or under provisioned my last year's tax expense. Okay. Now here is your logical understanding. See, for my last year, I only thought my tax expense would be 150,000. Right? That is my tax liability, I thought. That is the amount that I need to pay for taxes, I thought, last year. Okay. But actually, after 3 months, on 31st March 2008, I went to my tax department and they are telling me, sir, please pay us 165,000. Okay. This is the actual payment. This is the actual payment. Then now I cannot go and argue with the tax department. Obviously, they'll slap me off. Right? This I went and found out why was the reason. This is an underestimate. This is an underestimate. Okay. Sorry. This is an underestimate. Or what I would say in simple is this is a under provision of your last year. You thought in your last year you only have to pay 150,000, but in real time you all ended up paying 165,000. Okay. Now my simple question to you all. Your last year end is finished, and now you all are in your current year. You all found out this mistake that you all have done an underestimation. Now my question to you all is, are you all going to adjust the last year? Are you all going to adjust your last year? Is it correct? Is it correct? Now you all need to understand, now you all are currently standing in when? In 2008, right? Last year books are closed, last year books are audited, and last year books have been printed and given to the shareholders as well. Okay, so you all cannot go and adjust your last year books. Rather, what you all could do is, in your current year, you all can go and adjust your tax expense. In your current year, every year you all need to pay taxes, right? So in your current year, if there is a last year adjustment, in your current year, you all can go and adjust your books rather than adjusting it in the last year. Okay. Now, how do I determine whether it's an under provision or over provision? How do I determine whether it's under provision or over provision in terms of my last year, 2007 is, see here, I only thought my expense for last year would be how much? 150,000. So that is what I kept as an expense in terms of my tax for last year. But actually, I ended up paying 165,000. So that means my last year provision has been understated by 15,000, right? That means my income tax expense also has been understated by 15,000, right? Now that understated expense of 15,000, you all need to increase it in your current year. You all need to increase it in your current year. Why? Because last year, 2007, you all had understated your expense, right? Your expense and your income tax payable is understated last year. Now, we cannot go and adjust our last year books because why? It's been already published to the shareholders. So, in your current year, under your current tax working, you all need to increase your expenses. Okay. That increase in expense is called as under provision. Okay, and the double entry for that would be is, since you all are increasing your expense, debit income tax. Why am I debiting income tax? Because I'm planning on increasing my current year income tax, and credit your provision or payable for income tax. This is the logic behind under provision. In simple terms, under provision is when you all need to increase your current year's expense. Okay. 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 Finally, you all need to show something in your current year. For 2008, you all need to show an income tax expense, right? Under your profit or loss. So under your profit or loss, rather than showing only 180,000, you will include your 15,000 as well. So your tax expense, or I would say your total tax expense for your year ended on 31st December 2008, profit or loss would be 195,000. This is your tax expense that you all need to show in your balance sheet. Sorry, in your profit or loss. My bad, sorry. In your profit or loss, you all need to show an expense of income tax for your current year of 195,000. Okay. Okay. Now, this was only if you all have paid 165,000. Right? Read the question. Is the amount that was actually paid in respect of 2007 was 165,000. That is what I did now. Okay. Now I'm going to look into, if I had actually paid 140,000, what is my impact in terms of last year? This is what I'm going to look now. Okay. Now total under provision. I want you all to watch the recording at a normal speed. Don't go on +2, don't go on +1.5, which I'll do for the rest. I don't mind. But this, since it's new, I want you all to learn it properly. Watch it in a normal space manner. Okay. Again, the same thing. Your current year estimate is 2008. Is how much? 180,000. Now this estimate, you will be going recording. It is under your current year. So under your current year, you all estimated that for the next year, you all will be paying 180,000 of current year tax expense. Okay. Now, reading the question again. If the amount that was actually paid to the tax authorities for the year 2007 was 140,000. Okay, 140,000 is the actual payment that you all paid in regards to the year 2007, in relation to the year 2007. Okay. Now, again, coming to the same thing. See, in the year ended on when? 31st December 2007. I only expected my tax payment to be 150,000. So that is the amount that I have allocated in terms of tax expense, which I'll be paying in my next year, which is 31st March 2008. Okay. So that is what I expected. Okay. But actually, what happened was when I went on 31st March 2008 to the tax department to pay my taxes, they told, sir, you see, you don't need to pay 150,000. Rather, you only need to pay 140,000. So can you all see my last year's provision in terms of income tax? I have overestimated. Can you see? I thought my income tax expense is supposed to be 150,000, but actually it was only 140,000, right? That overestimate, or you call it as over provision. Okay, this is called as over provision of how much? The difference, 10,000. Okay, now again, the same question I'm asking from you all again. Now you have an overestimate in your last year. You thought that last year in 2007, you all only had to pay 150,000, but actually, you all ended up paying 140,000. So last year, you have over expensed in your P&L in 2007. Now, does it mean that you all can go and touch the locked accounts? Does it mean that you all can go and touch the finalized accounts of 2007? No. That excess 10,000 expense needs to be adjusted in your current financial year, which is 2008. Okay, that is what I'm going to do here. See, under my current year, under my current year, you see, under my current year tax working, since it is an over provision, you see, since it is an over provision, what I'll be going in doing is I'll be going in deducting it. Why? Because my last year I have over expensed my income tax. I cannot go and adjust my last year now. It's fully locked. So in my current year, under my current year working, I'll be going in deducting how much? 10,000. Okay. So for my current year, how much will I be going and showing as income tax expense? In situation number two, I'll be only showing 170,000. Okay, I forgot to write this down in your balance sheet. If it's an O provision, the same thing, balance sheet. If it's an O provision, go to your current liability under tax payables. You will be showing, sorry, you will be showing under your current liability. This is for 2008. You will be showing 180,000. That is it. If you all need to find out how does O provision or under provision work. Okay. Okay. Now don't worry. I have another question that I've kept here. Sorry, not this one. This fellow. I have another question where we'll be discussing this directly taken from your Kaplan kit. I'll be explaining the same over provision or under provision again. Okay. So during that time, if you all have any doubts, You all could ask. Okay. Okay. Now, finally, see that now earlier what we did was that question is if they ask in terms of MCQ. Okay. Normally, when you're having section C type of questions, the 20 marker examiner will give you all a trial balance. Okay, and the trial balance will look like this. It would look like this. In a trial balance, you'll have the debits, you'll have the credits. Okay, and he'll give you all two figures for your last year, saying that last year, say 2007, he will give you all debit and a credit. Now, out of this, you all need to understand he has already calculated under provision or over provision. You all don't need to again go and recalculate it. Okay, I've already given you. He has already given the figures. Now, you all need to find out whether it's an under provision or an over provision. How will you all find? I'm coming in. If your last year's income tax balance is on debit, okay, what do I mean is it is under provision or underestimated. Your expense for last year is underestimated. So that means you all need to increase your current year expense. You see, you have underestimated last year, estimate, so increase your current year's expense. So because your current year's expense is going to increase, that is why I am debiting it. Okay, that is why I'm calling it as under provision. Now, coming into over provision. If my last year's balance in my trial balance is a credit balance, on the credit side in my trial balance, that I call it as over provision. What would be the logic? In my last year, 2007, I have overexpensed my profit or loss. So that means under my current year expense, I need to decrease. I need to decrease. Can you see here? Can you see here? Debit provision and you credit your expense. Or you can credit your other income. If it's an over provision. If it's an over provision, your double entry is simple. You have to reverse your provisions. So that means you need to debit your provision. Debit your provision means it will reduce, as well as you can show it under expenses by crediting. Crediting means you're reducing your expense, or you can show it under your other income. Okay, that when we come into section C, we'll be showing it and we'll be learning it. Okay, so this is it in terms of your yeah, this is it in terms of your over provision or under provision. The next recording would be in terms of deferred tax, which is a new part. Here it is, and we'll be learning that in a bit.